Good afternoon, everybody. My name is Dan Gocher. I'm the Director of Climate and Environment at the Australasian Centre for Corporate Responsibility, or ACCR. Welcome to the second iteration of our webinar on BHP's Climate Transition Action Plan. I am pleased to inform you that we are joined by Jan van der Schalk of Platinum Investment Management and my colleague Harriet Kater, our climate lead for Australia. But before we commence, I would like to acknowledge the lands of the Gadigal people of the Eora Nation, the land from which I am dialing in from in Sydney, and pay my respects to elders past and present and acknowledge that sovereignty was never ceded. A bit of housekeeping, this session is being recorded. If you don't want to be identified, please use the anonymous function or post questions in the chat, and we won't necessarily read out your name. Harriet will present ACCR's assessment of BHP's Climate Transition Action Plan, and then Jan and I will engage in conversation with Harriet, hopefully, and then we'll take Q&A at the end. Now, before we commence, I should set the scene, I guess. Since our prior webinar ahead of the BHP Group PLC AGM a couple of weeks ago, where the Climate Transition Action Plan was supported by 83% of shareholders, we've subsequently heard from Rio Tinto, who've updated their 2030 emissions reduction target to reduce emissions by 50% by 2030, but no change on Scope 3 emissions. But I'll leave Harriet to cover that. And obviously there is quite a lot of talk about climate this week in the lead up to COP26, and we'll probably touch on that a bit as well. So over to you, Harriet.
Thanks very much, Dan. Good afternoon, everybody. Thanks for joining us. I'm dialing in from the land of the Ngunnawal and Ngambri people in Canberra. And as Dan says, I'm going to be talking through ACCR's analysis of BHP's Climate Transition Action Plan. First up, though, we're talking about the CTAP, or Climate Transition Action Plan, because BHP has made a commitment to provide their shareholders with a say on climate. What is a say on climate? The founder, Chris Hone, states that it's really in the hands of investors about how powerful this mechanism can be. We think that, this mechanism is at risk of losing its sort of impact if investors are too open to waving through plans that are not sufficiently ambitious. Considering, how perilously close we are to 1.5 degrees of warming already, and how observable the impacts of climate change are, just in looking at what's happened in the Northern Hemisphere summer with floods and fires raging, we really think, applying the utmost ambition to these assessments of plans and subsequent voting is the only option. We strongly encourage investors to use alignment with the Paris Agreement, particularly the goal of limiting warming to 1.5 degrees to inform your say on climate voting. And with regard to BHP specifically, their say on climate commitment is to provide this vote only once every 3 years. And as astutely noted by Glass Lewis in a blog post earlier in the month, that is quite a lot of time in what is a rapidly evolving landscape. 3 years is enough time for today's standards and expectations to become obsolete. And with COP26 coming up, the ground could shift sooner than later. I mean, even in the 2 or 3 weeks that have passed since we presented this analysis to the PLC investors, significant developments have emerged, with Rio Tinto rapidly increasing their commitment, as Dan referred to earlier, and a series of additional reports and analyses just identifying additional pathways and the urgency for decarbonisation. Okay, now we turn to BHP's actual contribution to climate change, why we're talking about them as a company with this issue. So historically, BHP has been a significant carbon emitter. In the updated Carbon Majors report from 2020, they were deemed the 19th largest contributor to climate change over the 1965 to 2018 period. And even after a number of key divestments, the South 32 assets, as well as the US onshore shale gas assets, their footprint today is still significant. It is dominated by Scope 3 emissions, which comprise 96% of their total footprint. And of course, iron ore processing and steelmaking is the dominant source there, representing 62% of total emissions. In terms of BHP's emissions reduction performance most recently, so they have a short-term target for FY22 to retain emissions at or below their FY17 baseline. This chart demonstrates that for every year that's passed since the setting of that baseline, BHP has tracked above the baseline, and which just helps to, it's important to note that the trajectory against a target is as important as meeting the target itself. The problem with climate change is the accumulation of greenhouse gas emissions in the atmosphere. And even though BHP will very likely fall back below that target for FY22 due to a series of renewable PPAs coming online, that doesn't negate the additional emissions that they have contributed to the atmosphere in between. Targets can't be seen as a point in time measurement only. And that's something to bear in mind when observing BHP's performance against their medium and longer term targets. Okay, so what are those medium and long term targets? BHP's Scope 1 and 2 targets for their operational emissions is for 2030 is to reduce emissions by at least 30% with an FY20 baseline. And then they have a net zero operational emissions target for 2050. For Scope 3, they introduce the concept of a goal and delineate between goals and targets. Targets are seen as sort of measurable commitments. Goals are seen more as defined as ambitions to seek an outcome for which there is no current pathway. So there's a series of goals for 2030 and a goal to hit net zero Scope 3 emissions for 2050, but the firm targets that BHP has committed to only cover a very small percentage of their actual Scope 3 emissions, being those from goods and services consumed and shipping. And in the CA100 Net Zero Company Benchmark Assessment of BHP's targets, the Transition Pathway Initiative assessment found that these targets are not aligned with the goal of limiting warming to 1.5 degrees and quite clearly do not cover BHP's most material Scope 3 emissions. And that's demonstrated again here with this chart. The orange bars for maritime and direct suppliers are the Scope 3 sources for which BHP has set targets. I'll just note that steelmaking bar includes Scope 3 emissions from BHP's met coal exports, as well as the processing of iron ore in steelmaking. Okay, so where does BHP's target sit compared to peers? I guess I preface this by saying that, we're a bit cautious about over-reliance on peer benchmarking when assessing company performance, particularly when entire sectors are not performing. If you're a leader in a underperforming sector, then that's not actually where we need to be. The key, benchmark really needs to always be the Paris Agreement and ideally 1.5 degree alignment. Regardless, doing those checks against where peers are can be enlightening. And as we can see for medium-term targets, FMG, Glencore, Rio Tinto and South32 all have significantly more ambitious medium-term targets than BHP. So they are lagging on their medium-term target, which most scientists and experts would state that it's those reductions between now and 2030 that really are the main game. In terms of Scope 3 targets, BHP is sort of tracking on par with where Rio is. So Rio's recent announcement didn't see a significant or any kind of major improvement in their Scope 3 targets. However, that Glencore and FMG are leading BHP in terms of level of ambition for managing Scope 3. So Glencore's 2035 target seeks a 50% reduction in Scope 1, 2 and 3 emissions. And of course, FMG, with much fanfare, committed to net zero Scope 3 emissions by 2040, just recently. All right, so what is BHP's strategy for meeting these their Scope 1 and 2 target? It's dominated by a lot of good activity in signing up renewable PPAs across predominantly their mining businesses. There's a key focus on diesel displacement, which makes up 40% of their operational emissions. There will be the uptake of 100% renewable electricity at mine sites will complement sort of electrification of vehicles where possible, and they're exploring use of green hydrogen for material movement as well. But we will note that for all anyone who's been a close observer of the CTAP will have seen that every time a target has been mentioned, there's been a footnote stating that offsets will be used as required. And that's a bit of a concern for us. There is no sort of commitment to cap the use of offsets. There's a raft of reasons why offsets are over-reliance of offsets is concerning. Be it the lack of permanence of abatement that they are achieving, their vulnerability to a changing climate and fires, threatening tree planting exercises, as well as just the fact that, a CO2 emission that's released in the atmosphere is more effective at raising atmospheric CO2 than an equivalent removal is. So avoidance has to be prioritised above offsetting at all costs. Okay, now we move to steel decarbonisation, the elephant in the room. Obviously, we are not going to claim that decarbonising the steel sector is easy. Until relatively recently, options were limited. However, if we are to limit warming by 1.5 degrees, no sector can be left out, particularly such a carbon-intensive sector as steelmaking. There are divergent views on how rapidly the sector can be decarbonised. We have the likes of Andrew Forrest out there saying that coal blast furnaces will be extinct by 2050. And as stated, he's got his net zero, or they have, FMG have their net zero steelmaking target for 2040. BHP are more conservative, or of the view they can't see a pathway for zero carbon steel by 2050, have allocated a relatively modest $65 million to tackle the problem. And these divergent views, inevitably it's partly attributable to difference in styles. FMG has a tendency to kind of set stretch goals to really drive ambition and innovation. BHP tends to be more conservative and set targets that it has modelled at least one or more pathways to achieve. However, in this discussion, can't be ignored that BHP is a metallurgical coal miner. They have a significant met coal business, and a number of those mines are currently on the market. So they would be conscious of any sort of bullish statements released to the market about intentions to enable steel decarbonisation, whilst they're in the throes of negotiating those transactions and potentially considering putting their remaining met coal portfolio on the market in later years. So just to summarise, we're not saying that this is an easy feat, but ambition is absolutely critical here. There are emerging complementary developments to realise decarbonisation of steel. There's significant uptake of net zero commitments across the countries where steel production is occurring. There are emerging initiatives that are looking to address the demand side. There's the Steel Zero initiative, where major steel consumers are signing up and making public commitments to buy 50% net zero steel by 2030 and 100% by 2050. European think tank E3G just tomorrow will be releasing their 1.5 degree pathway for steel decarbonisation. And Bloomberg New Energy Finance modelling suggests that by 2050, zero carbon processing of steel will be the most cost-effective option available. And just to wrap up this sort of commentary on decarbonisation strategies and targets, as some of you are probably aware that tomorrow the Science Based Target Initiative is releasing their net zero standard. That's in response to the raft of net zero commitments that corporations have been making with highly questionable strategies to meet them and emissions reduction trajectories. SBTI will be providing the first external independent verification of corporate net zero targets. And the key focus will be that those targets need to realise 90 to 95% emissions reduction across all scopes, so scope 1, 2 and 3 by 2050, with a limited use of high quality carbon removals, and that's capped at a 5 to 10% total. So we would certainly encourage all companies with net zero commitments to seek verification of their plans through this standard. And certainly are of the view that BHP should seek to do so, and only when that has occurred would their climate change transition plan warrant support. Okay, now turning to capital alignment and divestments. Firstly, BHP's Climate Change Transition Action Plan talks to capital alignment. but it certainly does not make a firm commitment to align capital allocation with 1.5 degrees. There's a reference to considering 1.5 degrees as a scenario in capital allocation decision making. And we can see why they're not willing to make that commitment. So their FY22 guidance for CapEx includes $2.3 billion for the petroleum division and $600 million to coal. They're proposing a series of new metallurgical coal mines, the Red Hill Mining and Saraji East developments. They're seeking mine life extensions for the Caval Ridge metallurgical coal mine, plus their efforts to extend the coal mine licence for Mount Arthur thermal coal out to 2045 prior to their efforts to divest. And on divestment, this is obviously a big emerging challenge that is living out across the marketplace. And I know that Jan and Dan will have some interesting discussions about that later on. It's probably stating the obvious, but just to reinforce, divesting assets to parties who have full intention to exploit those assets, being fossil fuel assets, in a manner at odds with a 1.5 degree trajectory, presents no climate benefit at all. It's seeing BHP transfer transition risk to physical risk. The divestments that are in train currently, there's the BMC met coal assets that are on the market. The Cerrejón thermal coal mine was divested to Glencore earlier in the year. Again, Jan might have some comments on that. And there's the ongoing efforts to sell the Mount Arthur coal mine as well. It is rumoured that Peabody is potentially a front runner for picking up both the BMC and the Mount Arthur assets, which would be a highly concerning development considering the corporate climate citizen that Peabody has proven to be to date. And of course, there's the planned divestment of the petroleum division to Woodside, and certainly no messaging coming out of Woodside about their intention to not exploit all assets that are both in development and currently producing in that portfolio. And even though the plan is to divest the oil and gas business to Woodside, BHP is still going full steam ahead in progressing a range of oil and gas projects in the petroleum division, and that was demonstrated in their quarterly results just from 30 September this year. So the Shenzi North project was approved within that quarter. They're still progressing the large Trion oil project and targeting FID for that in mid-2022. There's ongoing construction of new oil projects. They've agreed a pathway to expedite FID for the Scarborough project with Woodside, and allocating still significant funds to petroleum exploration activities across Trinidad and Tobago, the Gulf of Mexico and Barbados. So this is absolutely flying in the face of the urgent need to constrain fossil fuel expansion. That was demonstrated in the recently updated production gap report, which highlights that based on current plans, we are on track to produce 110% more fossil fuels in 2030 than what it would be consistent with a 1.5 degree trajectory. And by 2040, that grows to 190%. The IEA have pleasingly incorporated the net zero scenario as the central scenario in their World Energy Outlook. And I just reiterate that 1.5 degree trajectory relies on no new fossil fuel exploration, no new oil and gas fields, and no new coal mines or mine extensions. Unfortunately, BHP is pursuing all of those things. All right, we quickly now turn to what funding has been allocated to deliver on existing decarbonisation commitments, and we do this with reference again to BHP's peers. So BHP have committed $400 million in their climate investment program to be spent over a 5-year period, and that was a commitment made in 2019. However, they are lagging behind the quite significant decarbonisation funding commitments made by their peers, particularly FMG, Rio Tinto with their huge $7.5 billion commitment just from last week for realising their 2030 target, and Vale with a significant $4 to $6 billion commitment as well. On just transition, so BHP have not explicitly committed to decarbonise in line with the just transition. They have stated that they're waiting for, that to be better defined under the Climate Action 100 Net Zero Company benchmark. It does seem as though divestments are their preferred form of just transition rather than retaining and responsibly managing down assets and seeing out the rehabilitation requirements, as well as helping staff to transition into new work. There is a trend of selling the assets at key times. I think that has a limited shelf life, that strategy, and it's certainly something that needs to be monitored more closely. There was some worrying messaging coming out on communications with Hunter Valley workers relatively recently with their labour hire subsidiary, and is certainly a key issue to watch over the coming year or so. Okay, on climate lobbying, through BHP's membership of many industry associations, they are funding advocacy that is at odds with a safe climate and with the goals of the Paris Agreement. So they are members of 11 groups with lobbying practices that are misaligned with Paris and 4 that are potentially misaligned. And here is a great example, very hot off the press, of being a member of ACCR, the Australian Petroleum Production and Exploration Association. They released this advertisement across newspapers nationwide, seeking to position gas as a climate solution, in a critical week prior to COP. And as a member of ACCR, BHP is contributing to such advertising spend. People here may know that ACCR filed a shareholder resolution with BHP this year, seeking that they review their or strengthen their reviews of their industry association membership, particularly rather than just the formal policies of those associations, which can be quite a checkbox exercise. Does this association have a policy in line with Paris? Yes, no. It's less those policy positions, and it's more the actual conduct of those associations that's the point of concern. Somewhat pleasingly, BHP's board has elected to support our resolution on industry associations this year. However, supporting that resolution doesn't solve the problem, and ACCR will certainly be observing the conduct of industry associations that BHP is a member of over the coming year, but critically the next 6 months. Obviously, COP is coming up, but there is also inevitably going to be a federal election campaign at some point. So we'll be closely observing the conduct of those associations and, importantly, BHP's response. Tacit sort of silence means acceptance of the conduct, and we just cannot allow that to continue, and the associated negative impact that has on the climate policy landscape within Australia. Okay, and I think last one, climate governance. So this is an area of strength for BHP. They have pretty good structures and reporting lines through to the board on managing climate. Their remuneration framework is pretty strong, with a 10% climate change measures making up 10% of their short-term incentives. We would just say, though, that linking remuneration to targets that are not aligned with the Paris Agreement and a 1.5 degree trajectory risks incentivising incrementalism and not rewarding for science-aligned decarbonisation efforts. Okay, so I'm not going to read out this slide. It's pretty obvious where ACCR sits in terms of our view of the Climate Change Transition Action Plan. This is not a plan that is strong enough to warrant support in 2021. And by supporting it today, investors will be losing an opportunity to have a say on BHP's plan for another 3 years. It is a very fast-moving space. BHP's peers and the wider market and norms and expectations are moving quickly. There is absolutely no harm in voting against this plan and forcing the conversation with BHP to encourage them to lift their ambition and release a far more ambitious set of targets and associated strategies next year. Thanks.
Thanks very much, Harriet. I will add that BHP have said that they will provide a second, obviously a follow-up vote on their climate plan in 3 years. But given that Rio updated or has outdone BHP's target within a week of the first vote on its climate plan, I suspect that BHP might have to lift its ambition in that 3-year period, if not ahead of the next meeting. So we welcome in Jan at this point. We have a couple of set questions, and then we'll open it up to Q&A after we get through this set. Jan, when we invited you onto the webinar, you told us that you're convinced investors hold the levers to change the world, and that you cry yourself to sleep every night that this isn't a universally held belief within the investment management industry. Can you talk to us about that and how those convictions came about?
I can, but I'd like to start by thanking everyone for attending and listening, and I hope that by the end of my section, you won't all be like me and crying yourselves to sleep either, although I kind of think of it as something of a victory if we do, because then we've kind of hit home in one way, shape, or form. So the way that we look at economic activity, and particularly when we think about that in terms of investing in businesses, we tend to look, we look for companies at Platinum that solve a problem. And we think that any sustainable business solves a problem in one way, shape, or form. We may not agree with all the problems that it solves because it might not be an issue for us, but that's ultimately the aim of economic activity. If we're going to pay for something and have somebody else do it for us, it's because we're solving a problem. And here's the interesting thing: solving problems needs capital, and capital is the spring that drives all economic activity. Where we are today, and certainly in the equity world, we've kind of lost sight of the fact that there's a second piece to capital, which isn't just about aiding the solving of whatever the problem is and it coming to light and being a benefit to us. It also comes with rights. And if I want to think about that, just use an example that possibly is not contentious, but it's a different way of looking at stuff. When COVID hit and the government chose to turn around and say we want everyone to stay at home, their capital injection was JobKeeper. And JobKeeper, in this sense, gave the government the right to demand of us to stay at home. And the issue they were looking to solve, obviously, was the infection rate, and potentially deal with COVID by eradicating it altogether. So everything that we do in the world, when capital is involved in one way, shape, or form, it comes with rights. So, the way we look at life is that we're bringing solutions to light. They have a societal benefit, but ultimately, for that benefit to be enduring and for businesses to be sustainable, they have to align with our values. And one of the ways that they align with our values is that we actually put them out there. And I think the difference and what the subject matter, to me at least, is of ESG, is that whereas previously, if we didn't like something as equity investors, we'd sell it. I don't think that option exists anymore. We now have to engage. And I think that is where the differences lie. Our customers, in the case of Platinum, which are obviously people that put money with us that we invest, are demanding of us that we generate, on a risk-adjusted basis, wealth for them to be able to retire with. But today, they're also demanding that that wealth is generated in a way that it actually ultimately is worth having. And that is the key to why investors can actually change the world, because the driver that we have is one of generate wealth worth having.
I don't want to pry open this divestment versus engagement debate, Jan, but I suspect we might end up going there. It appears to us that BHP's divestment of particularly the petroleum business and the thermal coal mine, Cerrejón, as well as Mount Arthur, which is rumored to be on the block, that's being driven by I guess many investors saying they don't want to be invested in those fossil fuels anymore. Can you tell us how you see ESG metrics having unintended consequences like this, where you're essentially seeing a company, I guess, wash its hands of responsibility for the decommissioning or the rehabilitation of these mines after operating them, in the case of the Bass Strait, for the better part of 60 years?
Yeah, and just to be absolutely clear about that, our view is similar to yours, where we would go selling those assets to somebody else from a climate change perspective doesn't put us a step further at all. In fact, we would argue it probably takes us back, because now you've got an owner that may not have the same view that BHP has around, or anyone that have around being the custodian of that asset, and may actually look to exploit it. So, that is a negative issue, and we think that this has come about because of the investment industry's response to ESG, and particularly climate change. And don't get us wrong, there's two things that I want to put up front. Is, first of all, if there was the ability to invest only in companies that were making, for instance, renewable energy installations, be it wind turbines or solar and so on and so forth, and that would solve the problem, we'd be right up there doing exactly the same. And the second thing is, all of these responses are graded. And so in the early days of ESG, when we turned around and went, not we, but the industry turned around and went, we'll apply a negative screen. And hey, presto, we have a fund that is environmentally sound. That is absolutely right. What has changed from, call it 15 years ago to today, is the existential crisis we're facing around the environment and having to decarbonize our climate. And therefore, it's not enough just to be passive. You actually have to look at the bad actors and go, can I make them better? And the answer is, well, you can, but you have to engage. So the interesting thing about negative screens is they actually give you a free pass not to engage. They give you a free pass to investing in companies that nominally look like they're doing good. But let me give you a simple example that helps thinking about that. So a wind turbine, and this is not even the biggest, this is a medium-sized wind turbine, needs 4 tons of copper. It needs copper in the magnets and to generate electricity, but it also needs a fair amount of copper to connect it to the grid in one way, shape, or form, especially offshore wind turbines. Now, as we saw in Harriet's presentation earlier, copper is one of the major polluting parts of the industrial value chain. But here we are. We either have a one or the other choice. And the interesting thing is, I am very keen that we stick up as many wind turbines as we can. But if you look at the capex cycle of copper in the last 30 years, we're going to be net negative copper by the end of this decade as in the world. So all our ambitions around wind turbines, by way of example, or anything that uses, that creates electricity, is totally dependent on people mining copper. So here's the issue. We need to mine copper. And if you use Glencore a lot, and we'll talk about it, but we're a major investor in Glencore. It is required that we engage with it to ensure that copper is mined in a way that has the least amount of harm. But we also have to recognize that it's just one of those choices that we have to make. So what's interesting about the unintended consequence of how we currently do ESG is it's actually not moving us forward in one way, shape, or form. And let me give you one more example that I find really interesting. If you look at the composition of ESG funds and their mandates, somewhere, and this is in the world, somewhere between 40 to 60% exclude nuclear energy. Now, if it's about decarbonisation and saving the environment, nuclear energy is going to be part of that stack. And I appreciate there's a whole bunch of other issues that come with it. But what it does, it points, if you like, to the political element that people have introduced here by, I don't do nuclear, and I'll attract more customers. It's not actually thinking about the practical concern about what does the new energy stack look like by 2050.
We might have to agree to disagree on that one, Jan, on the nuclear front, but I will acknowledge that existing nuclear definitely has a role to play, but I can't see new nuclear coming into the stack, or certainly not in this country anyway, anytime soon. Just in terms of, I guess, the limits to engagement, and we know that particularly in Australia, super funds are under a lot of pressure from members and NGOs, some of whom I used to work for, to divest from fossil fuels. Is there a limit to engagement with with certain companies? How long do you give companies to change? And what are the tools available? What should that escalation look like beyond, your regular meetings with the chair and board members?
So there's two parts to that question, and the first one is difficult, because how long do we allow for change to occur? And we're talking about 2050 targets here, and if you think about that, that gives us, just under 30 years to really affect that change. So if the definition here is, and there's a lot of people out there that say all coal mines should be shut, and they should be shut tomorrow. Well, the problem you have is you won't have any lights either, nor the ability to run your computer and attend wonderful webinars like this one. So if the change that you're demanding is of a 3-year type, you're probably not being particularly practical. And therefore, the limits, if you're prepared to say that what is my definition of tackling the transition or tackling climate changes, I would look at someone like Engine One, who clearly decided that there was no limit to their ambition, and galvanized a coalition of shareholders and got themselves 3 board seats on Exxon. Now, the bit that I don't think people have connected enough with on Engine One is that wasn't done to shut Exxon. It was actually done to harness the amazing project capability Exxon has in the world of energy, the engineering capability Exxon has. I mean, a lot of people don't know, but Exxon actually invented the lithium carbide battery. So there's an amazing amount of science in these kind of organizations. And what Engine One has actually done is got enough members or board seats to change the strategic direction of the company, but not to shut it. And I think that's the key to everything. We really got to say, what are you looking to achieve? And if that's the case, I even look at the likes of AGL and Origin, and I go, really? Is our aim to shut them? Is there no infrastructure in the form that we get from AGL and Origin can't be used for, I don't know, pumping green hydrogen around the system or whatever it might be? So I think the key is that you never give up. But now it becomes about how intense it is. And we actually, to give you an idea, we run everything through a greenwashing screen, and that kind of sets for us the way that we try and engage with companies. And the first thing we look at is there board oversight for whatever form of ESG there is, and is there a director tasked with that oversight? Then we look at, what are the targets being set? So we kind of look at net zero 2050 aims, and we kind of go, that's got to be greenwashing. It only becomes interesting if you then pull it back, in 5-year increments, and actually start talking to us about what you're doing in the next 5 years. And again, we can talk about Glencore, but there are some very clear deliverables in a 5-year, 10-year, 15-year kind of timescale. So that's crucial. Now, how do those targets get met? Well, one of them is you put it into remuneration. And the more we see ESG fit in variable REM, and we look very closely at what form that takes, the happier we are. But then there's a couple of other things we kind of look for. First of all, we look who the head of ESG reports into. If it's the marketing department, it tells you an awful lot. If it's directly into the CEO, that's really very, very powerful indeed. And then lastly, we look at the third-party audits that companies lean on. But it's not as simple as saying, well, great, Ernst & Young or whoever signed off on it. We actually want to know who the auditor was, and we actually look into the qualifications for that auditor to provide that sign off. And again, we will then take that to the board and ask them how they perceived that sign off. So there's a great number of ways that you can create engagement, but if you want us to create change in the next 3 years, well, maybe divestment is the option. That's not what we're going to do. We're going to keep at it.
Very good. I do encourage, if you are listening, to put questions in the chat or in the Q&A function. but I will continue to drill yarn. Yeah, so in terms, so we know that BHP is divesting a whole heap of its fossil fuel assets. It's likely to retain what it calls the best quality met coal assets for the medium term, and is actually, as Harriet outlined, is looking to extend the life of Cabell Ridge to 2056. Well, I mean, what are the options available to a diversified miner like BHP with, and you could use Glencore as an example, with significant fossil fuel assets? What does that responsible management of those assets look like over the medium term?
Well, it doesn't look like divesting of assets and giving them to someone else. So that's point number one. It's almost a matter of taking responsibility for the set of assets that you have, yeah, and saying, I am the best custodian and manager of those assets. The second thing is it doesn't mean opening up new mines, and it doesn't mean spending more money on what effectively means long-term projects pumping carbon into the atmosphere. Now, equally, and I hate to pop anyone's bubble here, but if we think that by 2050 there won't be coal in the energy stack, we're kidding ourselves. And I'll give you one other example. And again, Harriet's presentation showed it very neatly. The making of steel, in whichever shape or form it may be, is massively polluting. Now, until his plans got derailed, Bryden was going to put up 3,500 offshore wind turbines. Last time I looked, they sit on steel poles. So the really interesting thing that we've got to recognize is that we're building the new energy stack on the old economy. So it's not as quick, it is easy to turn around and go, we just stop emitting. We actually have to recognize that we have to do some emitting to get to where we want to be. So that's really the second part of good custodianship, is to turn around. And again, Glencore would be a case in point. They bought out BHP and their other junior partner in the Cerrejón mine in Colombia, which is the second largest met coal mine in the world. And actually said, we are going to do this because we can shut it earlier, because we're not trying to corral or herd cats. And what we're going to do in the meantime is up production to actually facilitate the transition. Key here is, what do investors do? Do you believe it, or do you go out there and actually check and test and talk to management? And I think that is our job here. We're the long-term partner, actually holding their feet to the fire. And that's the key. I think where investors and companies work together is in recognizing that we have a similar timeline. What we're doing is solving for people's retirement. That's a 30-year proposition. Equally, companies are solving to transition and are talking about a 30-year proposition. I was talking the other day to an aircraft leasing company in Asia, who, and the interesting thing about aircraft is that particularly aircraft engines, but also the aircraft frames, are all measured and monitored, and every single piece of data that you have is available to you. But when you ask them, what is your scope 3? They get very shifty and squirm about in their chair and try not to talk about it. And they say it's too difficult to measure, all of which is not true. The reason they won't tell you the scope 3 is that the number is so large that all investors would probably sell, because they feel that they're exposed to the ire and anger of their customers. We turned around and said, well, we're actually more interested in measuring that number and then working out what we do with it, rather than sticking our head in the sand. And what's really interesting about this, and I hear this a lot, where people go, well, how can my small fund make a difference? This aircraft leasing company turned around to us and said, that's really interesting. There's only one other investor that has the same view. But interestingly, that investor was BlackRock. So if we all take a long-term view, we encourage companies to measure their emissions, and don't punish them for having a big number, but take that as a starting point for how do we now reduce it, we can actually get somewhere.
That is a very useful segue for the question that's just popped up in the chat about scope 3. And I might put it to Harriet first. And I think there's a bit of a caveat, I guess, in the absence of green steel at this point in time. But what are the alternatives for BHP to get control of their Scope 3 emissions? And would rating customers based on their carbon footprint be a pragmatic solution? And I presume by that means your Japanese, Korean, Chinese steelmakers.
Yeah, we talked about this earlier today, Dan. I mean, it sounds like a good idea. I'm not sure if it would be willingly embraced by BHP. I guess, yeah, putting aside their potential conflicts with their met coal investments, there's definitely an argument for BHP to perhaps at least allocate more funds to addressing the problem. The current commitment that they've made is not actually that material, especially compared to funds that they're allocating to, say, petroleum expansion. They could also lead by example in signing themselves up to that Steel Zero initiative. They've got a number of developments occurring. The potash project, for instance, that will require significant steel. If they were to help sort of build that demand side and lead by example, that would be certainly a good start. Yeah, Dan or Jan, happy for you guys to add.
Yeah. So the question is, what options do you have around dealing with Scope 3? And the other thing that I think is really important we recognize is that everyone has to kind of be pointed in the same direction. So regulators come into play here as well, and I think it's almost inevitable. And the sooner we get there, the better. Is that we start putting a price on carbon. Because it actually means that Scope 3 becomes a lesser issue. You are now basically having to think about what is it that I'm doing in a monetary sense by making steel and what it's being used for, to make diesel engines or cars or whatever it may be. So I think part of this is that Scope 3 will actually hasten the introduction of a price on carbon. And I think that's the other bit that we should just recognize, and it's wonderful, and I read a lot of it, and I wish it was the case. There seems to be this idea that you can be investing in a responsible and ESG sound fashion and outperform the market. The amount of capex required between now and call it the next 15 years before we drop down and we have all our wind turbines will mean that margins will be squeezed, and it will mean that earnings will go down. But that's a good thing, because if you can invest that capex now, what the payoff is in 30 years' time is going to be extreme. So to me, the capex investment, the measurement of Scope 3, all of it points to ultimately pricing carbon. And that actually then creates a really interesting piece where those people who can actually generate credits can be part of the solution over the shorter term for companies like BHP to offset some of their emissions. That's not saying that you offset and you get a free pass to keep polluting in the same way as you did before. It's part of a strategy, but that gets you to some obvious transition wins in the short term.
There has another question that's popped up, Jan, but before I get to it, I think that there was an interesting point there I think we should probably address, which is that, Rio in its announcement last week said it will spend $7.5 billion US over the next, to 2030 to reduce its emissions by 50%. And one of the questions that was reported in the FT following the presentation was that analysts were asking Rio whether that was value accretive. And as you've just said, it's unlikely to be. So then we're talking about how much value are investors willing to forego in order to see these companies decarbonize. And I guess that's the question for BHP is, kind of Rio, or if you say Fortescue is spending whatever it is, $1 billion a year, and Rio is spending $7.5 billion to 2030. What is the right number for BHP to be spending?
So I have no idea what the right number is, because I don't know BHP in any way, shape or form. But what I do know is that value accretive has a timeline attached to it. If I'm looking to generate value as an organization in the next week, well, I'm going to have to take some fairly risky punts to do it. So I think the key here is, if you think about this as something that we're trying to solve for over a 20 or 30-year period, it will absolutely be value accretive. If you want to think of it as an investor in terms of what is it going to do for the next quarter's earnings, well, it's massively value destroying. So the whole piece around accretion is actually recognizing what it is that you're trying to solve for. And this is where I find the investment industry is quite culpable. We tend to focus on alpha, we tend to focus on return, but those returns are so short-term that it makes me believe that we don't know what we're solving for. And certainly where we sit at Platinum, we're solving for people's retirement. We're effectively a forced saving mechanism. And that solution is a 30-year bet. So, 50% reduction over the next 2 or 3 years, it's going to be value destroying for anyone who has to invest that kind of capex. Over a 30-year period, I don't just think it's going to be accretive, it also makes the world a better place. And how good would that be?
That's the answer I'd hope you'd give, Jan. Harriet, there's a question for you in the chat. Did BHP provide any response as to why their emissions reduction targets are not SBT aligned or 1.5 degree aligned?
On the science-based target initiative, that comes down to use of offsets and the lack of SBT recognition of offsets as an abatement method. Interesting to see whether now that the net zero standard is being rolled out, which accommodates a small share of offsets, whether BHP might revisit that question. I would encourage them to do so. In terms of then, why their non-SBT accredited pathway is not 1.5 aligned, I guess they state that the pathway is what they have modelled based on available technologies. We also don't know what sort of hurdle rates or assumptions they're deploying and what level of ambition they're applying in the assessment of the abatement measures that are available to them for that pathway. We don't have that visibility.
Thanks, Harriet. It would be remiss of us not to ask you, Jan, if you would support BHP's climate plan based on on Harriet's presentation, which might be a bit subjective, but we think it's objective, but you might take a different view. Where would you sit on BHP's plan?
So if it's based on Harriet's presentation, the answer is we wouldn't support it because we have a view that divesting assets to new owners is just not the right thing to do. But the more nuanced answer is it would actually depend on our level of engagement. I think anyone who's making this as an investor is voting on this plan without having spoken to the company, without taking the opportunity as somebody who's effectively inside the tent, holding management to account, is probably just as culpable as just voting no on this thing.
That's we've had no shortage of meetings with the company, Jan, so I don't think you can level that criticism at us. But
I wasn't quite, but I.
Where are we? Look, I might go back to that question, Jan, about what does if you do get in a situation with a company, whether that's BHP or someone else, and they are not listening to shareholders' demands on any particular issue, whether that's it could be investors demanding they divest those assets, but in the case of say a pure play thermal coal miner who is looking to double production over the next 10 years. What are the alternatives available there prior to divestment?
Ranging from the most dramatic, which is you divest, but our view would be divesting doesn't actually get you to where you want to be. Now, I know you have a view that says, well, if the share price collapses, then the organization has to change. And I think there is something to that. The problem that you have is you could actually have a share price collapse and the organization being taken over by somebody who has an even worse view of that asset. So, our overall view is that the risks around driving share prices down are quite extreme. So then it becomes a case of, how am I engaging with the organization? Am I showing myself to be thoughtful around the length of time? Do I understand what's required? I mean, the other way to think about a lot of these organizations, and Glencore would be one, is that actually, and they've been very public about this, they're turning around and saying, rather than divest, we're using the proceeds that we make from our current polluting businesses, to transfer that into, as Harriet's presentation showed, into upping our production of rare metals and the stuff that's required in the green economy. So then it becomes a case of, well, how can we trust these organizations? I mean, it was really interesting. It was TED Talk the other day with Ben van Beurden of Shell in Glasgow, and Lauren, who walked off the stage, and the man from Engine One. It is absolutely fair, and I fully endorse the anger that exists around companies like Shell. And organizations like yours who've brought this to the fore have done the world a great service. And this isn't about us and them. But equally, it was a little disappointing to see Lauren, having made her point, not to come back to the stage and have a conversation, because one of the more interesting things about it is that the CEO of Shell, and I think it took a lot of courage on the part of the CEO of Shell to get up there, did actually answer her question, and answered it in a way that she would have been quite pleased about. So trust is hard won, but investors are in a position where they can actually go and ensure that that occurs. So it means more engagement. It means, am I talking to the wrong people? And ultimately, it gets you to the point of the likes of Engine One, where you really go for the impact side of things. That's a hard thing to do, though. I mean, we shouldn't underestimate how tough it is to get, if you like, a coalition of shareholders to actually push those kind of votes through. But it's a case of engage first and then go for more dramatic impact type of action.
And that is a great note to finish on, Jan. I would like to thank you very much for joining us today. Thank you, Harriet, my colleague, and thank you everyone for dialing in. If you do want to share this with colleagues, we will make it available on our website later on today. Thank you for joining.
Thank you.
Thanks, Dan.